Do you want to know why he's not texting you right now?
Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel, and what a difference a single day can make to sentiment, eh? With a single red candle, we have gone from we are early in a bull market to it's crashing, it's dumping, it's over, top callers, all of this kind of stuff. So what I'm going to do today is I'm going to do a few charts first, okay? And I'm just going to point at things and make sure everyone fully understands exactly what I care about, what I don't care about, where my invalidations are, where my trades are, and then there can be no confusion, because I know lots of people out there are day traders and are really concerned about intraday price movements. But for me, I really don't care about hardly anything apart from two different levels. So I'm going to do this first for about a minute and a half, and then we will get into today's episode where I've got some interesting developments to show you. So first of all, objectively speaking, Bitcoin's price absolutely crashed yesterday, right? All the way back to levels not seen since 4 or 5 days ago. So I can't really imagine what it must be like to be super concerned by this kind of thing. For me, let's be really, really clear, okay? Just in case anyone doesn't understand. We are long from the low of a stop below the cycle low from back here, okay? After a 100% move to the upside, we then nailed another cycle low and we got a trendline breakout to confirm it was in. We added another position and now it's a long and strong type of deal until something occurs. The only time I actually start to get concerned is if price trades down and takes out my stop, at which case we will pay a small stop on the second position, we will lock in the gains from here to here on the first position, and we will patiently wait until the next cycle low, which of course is a weekly cycle low as well, and then we should be able to get some tradable swings once more. So let's be really, really clear here. Yes, objectively speaking, we did crash all the way back to levels not seen since 4 or 5 days ago. But so far, we are still holding support. So far, we are still, and this is the most important thing, above the cycle low. So the only level I care about is my stop loss, which, as you can see on the hard right edge, is at $90,000 exactly. So until such time as either 90K is hit or we see a push to the upside, everything that happens in the middle, I don't care about. For me, it's over at 90K when I'm stopped out. And if I'm not stopped out, then it's not over and we got a full cycle ahead of us. So that's Bitcoin. The stock market is a very similar deal. We are expecting this cycle to kind of roll over and potentially break down and to put downside scenarios on the table. But just in case we're wrong about this, the best way to be wrong is to make money whilst you're doing it. So if what we're going to see here is this double bottom into the cycle low, it's actually a 2 drives because it did slightly undercut it. We've got a thesis for a long because that's a swing and a daily cycle low confirmed. And now if this thing is going to run higher, we are positioned for that. And as with any cycle trade, the invalidation, the stop loss is right here on the right hand side, okay, 5815 is the stop loss until such time as we get stopped out by trading below the cycle low, qualifying this thing as a failed cycle, then I don't care what happens, and it's only reasonable since we're early in a cycle to expect a little bit more upside in the worst case scenario. If we can get a breakout of this downward slope in red, then it should be party time thereafter. So similarly for Bitcoin and the stock market, I care about the level of my stop loss, and until such time as we take that out and fail the cycle, then I am bullish, biased, and I don't care about the intraday swings. Also, again, when we zoom out, 3 weekly candles after the recent 108K top are very similar to what happened after the Bitcoin ETF launched at 49K top during January of 2024. What followed was 6 weeks of up only. Now, when we zoom in and take a look here, doesn't this not look exactly like this so far? So even with this 5%, 6% move to the downside, as ever, the cycle low is the invalidation, and until such time as that cycle fails, then it is only reasonable from a cycle perspective to be ready for some upside here. Not to mention, Kramer here thinks 90K is next.
I think 90,000 is next level.
So there you have it, okay? 90,000 according to Kramer, which probably means we're not going there, and 90,000 just so happens to be the invalidation for any bullishness. So once more, it's very, very binary. Until such time as we trade 90K and stop me out and lock in the profit from the first trade, then I don't care. I can see why people do care, because we liquidated 205 million in cryptocurrency market in just 60 minutes yesterday. So this again speaks to people trading like this, zoomed all the way in, unable to manage risk, over leveraged, unaware of how to size their positions and that kind of thing. And of course, that is what causes this. But it's very important that we do shake out and liquidate as much leverage as we can from the rookies, because people like Michael Saylor need liquidity to buy. In 2024, they bought a whopping 258,320 Bitcoin for 22 billion. And the only way that we free up the supply is first to take it from the rookies, the inexperienced, the people that don't understand how to manage risk. And of course, the people that think a 5% candle in a 70 vol asset is something to write home about. I always find it fascinating. I'll move on from this topic in a minute, but it's got to be said, right? I always find it fascinating that a 5% move here gets people riled up, gets people really angry and emotional, but they completely negate that we're still up 71% in the past couple of daily cycles. So it's pretty interesting to me. I actually feel quite empathetic towards those people, even though I'm kind of mocking them at the moment, because it must be incredibly stressful to live your life like that. If you are blinded to this upside and the 5% down day is what really sort of ruins your entire day and has you getting all miserable and stuff, I mean, that must be a pretty tough life to live. So my heart does actually go out to these people, even though I am also kind of laughing at them. The next thing is, yesterday we saw very confusing price action because we got jolts come out, job openings, and it came in higher than expected. So that's actually bullish for the economy, okay? We're perhaps starting to see some level of repair in the labour market. However, with that said, it's still very, very confusing out there, okay? Good news is bad news, apparently, and bad news is sometimes good news. But the jobs in the US, these two right here, are both conducted by the BLS. And we're at this weird point in time where there's a difference of around 1.5 million people between the two surveys. According to the household survey, the US has lost 1.3 million full-time jobs over the last 13 months, but it's created 600k part-time jobs, which is a net of minus 700k. But according to the establishment survey, the economy has created 2.7 million jobs in that same period. And in November, the household survey estimated a loss of 355k jobs. But in the same month, the establishment survey gained 227k jobs. Now keep in mind, these are two surveys conducted by the same organization. So in other words, one of the BLS's surveys suggests the economy is thriving, and the other one suggests the economy is rolling over. So they both can't be correct, right? And of course, when you've got this kind of situation going on, it makes it impossible for the market to get some data like this and actually handle it correctly. Like, how do you use this data anymore to know what to do? This seems to be a very, very emotionally driven market at the moment. And that, of course, is leading to some volatility. But again, I make the case that that's why the invalidation levels are so important, okay? I only care about these two levels. If these levels are not traded, then I remain bullish biased, at least whilst we're still very early in the cycles. We also got DT coming out and pointing out the data is fake. The story is the ISM services report, quoting so-called purchasing managers, which don't exist, incorrectly states that inflation is rising. That is wrong. The ISM knows it's wrong. It's just another example of fake news. So as you can see, the data is challenging to navigate. It's all kind of make-believe and nobody knows what's real and what isn't anymore. But something that is important is DT again says that interest rates are far too high. And the last time he said something was too high, it was $1 back in 2017, just days before his inauguration. So we've got this kind of history repeating and rhyming type deal simulation thing going on again. The dollar was too strong back in 2017, according to DT, and then the inauguration occurs and the Dixie rolls over. Now, of course, something like this, if it was to occur, would certainly fuel a risk on and a big upside moment for the likes of Bitcoin and the stocks. And all of this is occurring against a technical backdrop where we could potentially see the 10-year yield finally start to return to the downside. The 10-year yield just made a new high into resistance. You can see this here. And it did so on negative divergence. If the divergence maintains as it did in previous events, it could certainly lead to a reversal in the yields. We saw it here and here. If we can indeed find rejection at resistance here and start to move to the downside, of course, that will fuel a big risk on moment in the stocks and Bitcoin. And note as well the timing of all of this, right as we are early in a daily cycle with a daily cycle confirmed for the stocks and of course for Bitcoin, as I showed you earlier. So can you weather the storm? Can you have an invalidation level? Can you remain cool, calm, and collected until you have technical reason not to? The Dixie still seems to be pushing up, okay, so the Camel Crew has again been on top of this. The precious metals, slowly but surely, you know, we got silver moving into profit. Gold looks like it is trying its best to confirm a new cycle. It might have to have a flush to the downside. The members know all about this. Bitcoin we've already covered, right? You know the level I care about. And as always, the stop is visible right here. These are public levels, public invalidation levels called out ahead of time. Until such time as 90k is breached, Camel does not care. For the stock market, until such time as my stop loss level is breached, Camel does not care. And notice how we were talking about, especially in the members section, building our exposure slowly. Hopefully you can see this is exactly why we like to do that. I won't say any more on that. And the same is true of the Dow, right? So we know where the levels are to watch. We know how to handle them. Other than that, trade safe. Have a fantastic week. I'm your boy Camel. Until next time, God bless. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his mind.